This lesson is about finding state and federal unemployment tax, which is Section 6.2 out of the book. Federal Unemployment Tax Act is a federal tax used for state and federal administrative expenses of the unemployment program. The State Unemployment Tax Act is a state tax used to pay benefits to unemployed workers. So when you collect unemployment, you collect it from the state. We are going to be looking at both taxes. So to start with the state unemployment tax, it is levied on a certain portion of an employer's payroll on the basis of the gross wages paid to the employee. That means the money they made based on their hourly rate or their salary before the deductions. Like property taxes, these taxes are an expense to a business, and they are paid by the employer only. The rate of the state unemployment tax varies considerably from state to state. However, most states adopt a base amount of earnings on which the employer must pay tax. So in our first problem right here, Carter Wholesale had total wages of $219,300 for the first quarter. That's what all of their employees grossed. All the wages were subject to the state unemployment tax of 3% because no employee had earned, this is supposed to be earned, the maximum of $9,000 by the end of the quarter. Find the amount of state unemployment tax owed for the quarter. So you're just going to take their total wages for all of their employees, and you're going to multiply that by 3%. So putting that into our calculator, we're going to do 219,300, $219,300 times 3%. And that's going to give you $6,579. So that is how much the employer has to pay to the state based on their employee wages. Now I want you to look at this chart. In the chart, you're going to find the first and second quarter earnings of Madison Trucking Company. So here's your first quarter earnings, and here's your second quarter earnings. They have 6 employees, and the state unemployment tax owed for each of the employees at the end of each quarter is also shown. Once each employee's earnings reach $9,000, the employer stops paying. So notice that Brown reached the $9,000 in his first quarter. Actually, he exceeded it. So he exceeded it, Jones exceeded it, and Green exceeded it. So you only calculate the state unemployment tax on the $9,000, no matter what they got past that, because that's the only amount taxed by the state to start with. So then they figure out their state unemployment tax based on the 3%. So they multiplied that by 3% and got this amount right here. So the employer paid this much to the state in the first quarter. Then when I look at the second quarter earnings, I get to figure out how much did they need. So this person doesn't have to pay any more taxes because they already reached the $9,000 minimum. This person only needed $110 more. So they're only going to pay, the business is only going to pay state unemployment tax on the extra $110 that they needed to reach the $9,000. This person exceeded it in the first quarter. This person exceeded it in the quarter. This person only needed $1,290 to reach the $9,000. So they're only going to pay on that much, even though they made $7,710. So they're going to take 3% of this amount, which gives you this. And then this person didn't reach the $9,000. They only needed $2,200 more to reach the $9,000. So they're only paying tax on that, even though they made $6,800. So they'd find the 3% of that, and then that's going to be how much the employer pays for the second quarter. Okay, so that's state unemployment tax. Now we're on to federal. Federal unemployment tax is very similar to state unemployment tax, and it is also levied on the employer. Generally, this tax applies to every employer who during the last or present year paid wages of $1,500 or more in any calendar quarter or had one or more employees at any time in each of the 20 calendar weeks. So they just had to have an employee. If during any calendar quarter the amount of the federal unemployment tax equals or exceeds $500, the employer must deposit it with the IRS. To compute the federal unemployment tax, multiply the gross earnings subject to tax by the tax rate. And so here we have Mario Rivera earned $6,450. Well, one of the other pieces of information is the Federal Unemployment Tax Act only requires you to pay up to $7,000. I'm sorry, let me rephrase that. They only require you to pay a percentage of the first $7,000 of the employee. So it's going to be 7,000 times this if they use all their money. Just like in the previous example here, they only had to pay up to the 9,000 mark, right? So for federal, it's 7,000. So for this particular worker, I'm looking at, by the end of the second quarter, his total earnings were this amount of money. So he clearly went, in the first quarter, he didn't reach the $7,000, but in the next quarter, he did. How much federal unemployment tax will Mario's employer owe for his second quarter? That's the key earnings. If the federal unemployment tax act rate in his state is 0.08%. So that means that I'm going to take his total earnings were this amount. But in the first quarter, he earned this amount of money, which he paid federal unemployment tax on completely. He paid the whole amount, the 0.08% on this in the first quarter. In the second quarter, he only has to pay what's left of the $7,000. So to find that, I take the $7,000 and I subtract the $6,450, which is going to give me $550. That's how much money he needed to earn in the second quarter to pay taxes and reach the $7,000. So now at $550, we're going to multiply that by the tax rate, which is 0.8%. And we'll do that in our handy-dandy calculator. So you have the 550 times 0.8%, and it gives you $4.40. So the employer is going to pay $4.40 in federal unemployment tax for Mario for his second quarter of employment. If you have any questions, let me know.